You were listening to ChartingWealth.com for Wednesday, the 9th of December 2015. We always start with IYY because it's the total market. This is an index fund, an exchange traded fund that represents everything going on in the market, all the stocks. It's the best place we feel like to start. We see that the market crossed over going down on the 2nd of December on our 2-day candle. We always start off with our larger 2-day chart. We are currently in a confirmed down move on that big chart after it topped out, somewhere around the 2nd of December. And as we go into the 9th, as we close the market on the 8th of December, we see that we have the last two-day candles are down candles. We also have a down derivative oscillator. And like I said, the MACD rolled over going down on the 2nd of December. If we go back and look at the 4-hour, the half-day chart, we can see what happened during the course of the day. The market opened and moved down substantially during the morning, and in the afternoon it moved up a little bit, but it did not move up enough to overcome the down move, so it was down about 0.5%. So we have confirmed down moves in our short chart, down moves in our large chart. And remember, we like it when the short chart corrects in the opposite direction and then moves back over with our big chart, or when they both move together as we saw with SPY back on the 2nd. It turned over moving down, and at the same time on the 4-hour chart, it also moved over going down. Always a good sign when both the charts at the same time are rarity, but when they both go down at the same time, that is a good sign the market's going down. Now, if we look at what happened, we are, in this chart, always looks similar, very often looks very similar to the total market. Not exactly the same, because the S&P, the SPY, that's the identifier, the symbol for this, but the SPY represents the Standard & Poor's 500, and sure enough, two down candles, two-day down candles, so that's 4 days of down movement, rotated over going down actually before the 2nd, right there around the 30th, rolled over on the 2nd, and has continued to move down, so that's confirmed down move along with confirmed down move on the shorter chart. Like I said, we were down about 0.67% for the day. Now, a chart that doesn't look very similar a lot of the time is the Qs. What is the Qs? It's also called the cubes. It is the NASDAQ 100. What do we see it doing? Well, it's in a down move, confirmed down move on the MACD. However, our derivative oscillator's in an up move, and we had up movement just barely, 0.03, so 3/100ths of a percent. Not much of an up move for the day. Technically, up move. Now, the 2-day candle shows more than that because it's showing the moves of the last 2 days. When we revert back to our half-day or 4-hour chart, what do we see? Well, we can see that it's also in a confirmed down move, and we see that there was down movement in the morning and then up movement in the afternoon, which meant a slight movement for the day, but again, confirmed down moves on the big chart and the short chart. So all three of our indexes, the Qs, which represents the NASDAQ 100, confirmed down moves, small and big chart. The total market, IYY, and S&P 500, represented by SPY, the ETF. So that is where we are now. Lastly, let's take a look at what gold is doing. Well, gold is not yet crossed over going up on the big chart. We still don't have a crossover yet, but getting closer. The derivative oscillator has rotated over, and we have 4 days or two-day candles worth of up moves on our big chart. If we go back and look at the 4-hour chart, what do we see? Gold was up technically 0.71% for the day. Doesn't look like much, but technically it was up for the day. Had a crossover back on the 3rd going up, but it's really not done anything since it hit its highest high and some exuberance at about 104 or so. And now gold closed at about 102.79 or 102.84. And again, up just a little bit for the day, not much. So we'll continue to watch gold, see if it staves off the way that it closed today, and if it will continue to move up or not, yet to be seen. Still don't have a crossover on that 2-day chart, and we're not feeling as good as we once felt, those who followed us for a long time. Our 4-hour chart was prescient in its ability to predict moves, and it started failing us around the, what is that, the 13th or so of November. Gave us a false up move and then moved all the way down to about 101, something along those lines, and really let us down. So we are not trusting anything at this point around, what is that, 101.50, something like that, $100.50. So that seemed to be our bottom fallout number, but because of the sideways slippage, our MACD just wasn't a great predictor for us. That is where we ended up the markets today. Appreciate you being with us. As always, tune in every day. We're here to spend the time and energy to report these markets for you. We hope you find it helpful to your investing, to your training to invest, because again, we're not a stock calling service. We are an education company, and that's what we're all about. Go to our website, chartingwealth.com. Follow all the great training we have there. Follow the markets with us every day. And if you don't already have our 15-minute How to Read a Stock Chart video, you need it. How easy is it to get? Super easy. All you got to do is go to the website, sign up for our newsletter, and guess what you get? You get our link to How to Read a Stock Chart video, which is not published at our website. You also get our charting layout that we use with the help of the folks at freestockcharts.com. You go to freestockcharts.com, you're not going to have our layout, but if you sign up for our newsletter, we'll send you a link to it. You can download it. It'll pop you right into Free Stock Charts. You can set up a free account there, save our layout, and you can follow us every day and do what we do. Thank you so much for listening from chartingwealth.com.